I recently have been taking losses on my GoFundMe trader accounts, and I'm going to be making this video to help you guys navigate around the markets and understand where I've been going wrong to help you guys with your GoFundMe trader accounts. Typically in the markets, I look for swings of liquidity. So I look for major key levels to be brokered, violated, manipulated, however you'd like to explain it. And I wait for these levels to be targeted, but I've been looking for more internal time frame liquidity, and it's not sustainable, it's not good enough. So looking at my chart here, you can see this was a previous Euro USD trade that I took, I believe last night of this recording. And the breakdown of the trade is very simple, right? We went and swung this major high on the left here. The market ran up. We had a nice small rundown. It swung all the trendline liquidity that was being created by here. As we spoke about previously in videos, we swung that liquidity here. And as we're marking down, that is where I looked to take my short position. You might be thinking, Cree, well, you're taking a short position in this long. Well, no, I looked for a scalp around this level because I anticipated that this level would get swung and then we'd have a markdown into a potential point of interest like so, which we did, but I didn't close. So my number one tip is to make sure you close at points of interest, even if your risk to reward hasn't been hit. So this trade currently at this point when I was watching it, I was up around $4,000. I was up around $4,000 on a $100,000 funded account challenge with a $2,000 risk. So I wanted around $6,000 for this trade to give me a 1 to 2 risk to reward whilst risking $2,000, which is 2% of a $100,000 account. However, I didn't take the 1 to 2 and I wanted the 1 to 3. Okay. Looking back at the charts now, guys, if you're trading 1 to 2s, 1 to 3s, 1 to 4s, go back and look at the probability of your setup hit it. So for example, if I look back at Euro USD and I measure the pips, so say for example, we took a long around here, what is the pip amount that it's going to move towards? So this is 36 pips, so you could have hit a 1 to 3. Let's say for example, we took a short here, you would have hit a 1 to 3, right? But if we're looking for scalps like this liquidation of this high in the Asian session, for example, and we just want to take a short here, maybe back to these lows, if we get a late entry around here, that's only going to net us around 25 to 27 pips. So our 1 to 3 risk to reward will not hit. Okay, and looking through the charts, we can see that usually a 1 to 2.5 or a 1 to 2 will definitely hit. A 1 to 3 is a reach. Usually the market moves to a 1 to 3 in the current state of Euro USD. However, we don't usually hit that 1 to 3 consistently, depending on your entries, exits, things like that. So the thing I've learned on Euro USD is it likes to go for 1 to 2. So what I'm doing now for the rest of the week is switching to 1 to 2s or 1 to 3s, depending on my risk analysis. So from my analysis here, I just didn't want the market to break this pivot high because that's where our supply zone is. And as you can see, we wicked above the high, come down a little bit, and then the market did run and go and swing these highs. So that's one thing we speak about risk to reward. Okay, make sure you're potentially taking your trades a little bit earlier than you should be. It's fine to do that. Okay. So the next thing is allowing the market to go actual swing major liquidity. So if we just jump onto an hour time frame and analyze this, we can see that this high is going to be a major high. This low is going to be a major high. So if I just get rid of this level here, because I've just been doing technical analysis on Euro USD, if I just get rid of this level here, add these, these are going to be our major legs. Okay, so we're going to make sure that this high and this low is protected, and if they're wicked or broken, then we can look for a trade. For example, this wick here, we could have looked for a short back into a point of interest, and if we did have a nice break here like so, we could look for a back test into this specific zone and then target this previous high. And like example here, we wicked this high and came down, and I was looking for a long position. Let's have a look at this long trade and see where I went wrong. Maybe my risk to reward is off or something like that. So we can look back. Again, I'm being completely transparent with you guys. I don't hit 100% of my trades. I do take losses. So number one, timing of this trade as I look for. So 10 a.m. is a really good time to trade. Okay, we're moving into the New York session, etc. And unfortunately, this trade did go hit my stop loss, run up a little bit, and then by the time it's Asian session and you don't want to be trading in that zone. So this specific day, okay, the 29th of November, let's have a look at the day I was trading this. So the 29th of November, off the top of my head, was last Friday. Last Friday, not a good day to trade. I think I lost around 1% on another funded account challenge. But what should I have waited for? Maybe I could have looked at this liquidity and gone, actually, it swung this high, right? So what is the likelihood of it gravitating back and swinging this high? Very slim, right? Because we've already swung this major high. So therefore, one, I should have been looking for longs. Two, my risk to reward was fine. Timing was fine. Maybe the day was wrong. Typically on a Friday, the markets are a little bit slower. We had, I think we had GDP on this day. I can't think off the top of my head. But yeah, of course, the trade was drastically wrong, right? We swung that major high. And if we go into like a 4-hour time frame, I'm sure we'll be able to see that swing of a high. Yeah, I mean, look at that. So even on a 4-hour time frame, you should have had the bearish intentions. That's very, very bearish. Even though we're on a small uptrend, we're overall on a downtrend. So I was wrong on that trade. You can see this was another trade I took. So that trade was just very wrong. I had the wrong sentiment. But this trade here, I was right, which is really annoying. I was up 2%, and I did take it. And what I should have waited for is this drastic move down here. I should have took the 1 to 2, and then what I should have done is gone on a higher time frame like the hourly and targeted the major high, which is this pivot here. So we have this pivot by here, and you can see we have the market liquidate that high. So maybe if we got into a small time frame, you see after that liquidation, we could have looked for a setup. Maybe once we broke this structure here, we could have looked at these back testing zones. You know, again, this is me hindsight trading, so I don't know thoroughly as I would be trading it, but maybe we could have took a short around this zone and allowed the Asian session to go swing this low down here. Once this low was swung, we could have looked for a, you know, because it's not going back up to swing that high unless it wants to. So we could have took a supply short there, etc. So the main things that we spoke about is waiting for the market to liquidate the key zones in the market. You know, don't trade against the trend. Do not trade against the technical analysis that's being presented to you. Wait for these levels to be broken. And if the market is looking to potential reverse, do not feel scared or do not feel wrong in taking your trade a little bit earlier. You know, if for example that 2% risk that I could have secured, I could have secured $4,000 in my $100,000 account. I now have 4% to go down into. So if I'm risking 1%, I have 4 trades to lose until I'm back break even. So now thinking about it, it's like, okay, yeah, maybe we should have, but again, I was greedy. I wasn't looking at the technicals. I'm a very, sometimes I get into this headspace of being very biased against my own trade. I think I'm always right, whereas sometimes it's like, okay, you're right for this small percentage, so just take it. You know, take that trade and then do a bit of reanalysis. And like I said before, this high needed to be swung. I was anticipating this low to be swung. However, this is the higher low structure. We are in an uptrend. So we have this kind of structure here. We have that low down there. We have that high which was swung. We're now coming back in, back test and reaccumulating into a specific point of interest. And then the market's running back up and swinging that high. So we're in that 1, 2, 3, 4, 5 Elliott Wave 5 action. So I didn't see this. I would have seen it I see it in hindsight, but I don't do that type of analysis sometimes when I'm trading because I'm very against my own trade, you know. So I'm human in the end of the day. I make mistakes. I'm just alerting you guys to things that you guys need to not make mistakes on. Okay, sticking to one pair is very, very useful. Trading liquidity in the Asian session is very useful, and just going with your gut instincts, just going with the bias that you think, but also do it from a normal standpoint, do it from an understanding standpoint. You know, make sure that the trade is looking to go your way and you're not fighting against the market. Another thing we'll do just before the end of the video, guys, is to make sure we're having a look at the DXY. The DXY is the dollar index. This is my little secret. I don't know if many people talk about it, but it's something that I use as an inverse kind of type of technical analysis. Basically, if euro is going up, DXY will be going down. So we're going to make sure that DXY is looking bearish if we're in if we're in buys on the euro. Anyway, I digress. Let's jump onto the chart. So what I like to do is go to the top of the chart here and press plus. We'll type in Euro USD or whatever ticker you're trading, whatever symbol you're trading. Make sure the USD is secondary to it. So we can see here, they're completely inverse. And this short here that I took here was actually good because the DXY was in an uptrend. The DXY was looking to continue on up. And as you can see, the euro was looking to sell off, so on and so forth. we can have a look at this potential long position down here. You can see that the market looks 2% higher lows. Maybe we find some support in these zones down here. And as you can see, the DXY has sold off from maybe liquidating a previous high, maybe these highs here even. And then we've had a mark down, we're coming up, testing this imbalance, and then we're looking to continue on down to swing this low. And inverse to Euro USD is looking pretty good for a long. So that's just one tip that I would give you guys for the end of this small little lesson for my GoFundMe traders out there. Make sure you're aware of what you're doing. Make sure you're making sure that everything that you're doing is calculated and precise, and make sure you're taking it seriously. It's a business in the end of the day, and I want you guys to pass these GoFundMe trader accounts. I want you guys to make payouts. So any advice I can give you to help you out through your journey, I'm here for that. So yeah, I appreciate you all jumping in the video. I apologize for my setup. It's not the best setup. I know I had a cleaner setup before. I'm working on getting a new setup. I've just moved house. I've moved office as well. So I'm in pretty much a brand new office. That's not my style, I guess, my kind of like darker room theme. So hopefully in the next couple of weeks, I'll have a better setup for you guys for the rest of these videos, so it looks more aesthetically pleasing. But yeah, I appreciate you all hopping into the video. Make sure you drop a comment below. Let me know what you think of the video. Let me know if I explained this thoroughly and if it helps you throughout your week. Back test this, use my trading journey to help you back test this. And yeah, as always, I appreciate you guys for hopping into the video, and I will see you in the next one.